As the world watches, Bitcoin is changing the landscape of corporate finance forever. In early 2025, corporations began ramping up Bitcoin allocations, reaching unprecedented levels. Industry titans like Tether and Metaplanet are leading this surge with record Bitcoin holdings. However, looming uncertainties in U.S. trade policy threaten to alter this aggressive accumulation trend. BN Crypto connected with industry leaders to unravel the sustainability of this corporate Bitcoin movement. This isn't just speculation. Companies are increasingly viewing Bitcoin as a legitimate asset class. Juan Pellicer, from Into the Block, expresses a growing acceptance of Bitcoin beyond speculative trading. In the first quarter of 2025, numerous firms, including Tether, significantly bolstered their BTC reserves. Tether made headlines acquiring a staggering 8,088 Bitcoin, surpassing their previous low additions. Meanwhile, Metaplanet has increased Bitcoin purchases dramatically since starting in mid-2024. Despite record-breaking allocations, some major firms are expanding their Bitcoin supply without setting new highs. Strategy, formerly MicroStrategy, remains committed, amassing a jaw-dropping 53,396 BTC this year alone. Michael Saylor's bold strategy has inspired numerous companies to embrace a similar Bitcoin approach. New entrants like Fold Holdings are also exploring Bitcoin's potential, recently acquiring 475 BTC. Even established sectors are showing interest, with GameStop updating its investment policy to include Bitcoin. GameStop signals speculation about allocating some of its substantial cash reserves towards crypto assets. What's driving this corporate Bitcoin trend? A desire to hedge against inflation is emerging. Investors view Bitcoin's finite supply as a safeguard against the depreciation of traditional currencies. Shannon from CoinShares highlights that Bitcoin serves as a hard asset hedge for businesses facing currency devaluation. The recent adjustments in accounting standards are making Bitcoin an attractive corporate investment option. The FASB's new rules allow companies to report unrealized gains from Bitcoin as income, incentivizing accumulation. Shannon elaborates on how trading depreciating currencies for Bitcoin can improve financial statements. The innate volatility of Bitcoin attracts riskier investors while providing diversification for companies. Shannon explains adding Bitcoin to a balance sheet may significantly enhance a corporation's returns. Strategy's history with Bitcoin has yielded considerable capital gains, proving its profitability potential. Yet, with potential high losses looming in a bear market, companies must carefully weigh risks. Businesses facing performance issues might find Bitcoin's volatility strategically advantageous in crowded markets. Companies like GameStop demonstrate how Bitcoin could positively shift stakeholder perceptions during downturns. Tether's financial strategy allocates 15% of quarterly profits to Bitcoin, indicating strong risk management. Despite Bitcoin's volatility, its long-term decreasing trend may favor cautious corporate investors. In the face of recent market turmoil, corporate appetite for Bitcoin might fluctuate significantly. This unforeseen political climate challenges the corporate embrace of Bitcoin while revealing growing acceptance.